Good afternoon, everyone. Welcome to the prop trade. It is Friday, finally, 20th of February, final third week of February, coming to an end. Excuse me, I got a bit of a runny nose. Excuse me. Hope you're well. Hope your week's gone well. My trading's been up on the end of day, not very much, and down on my scalping a bit today, but I've still got another session to go tonight. So we see how all that finishes. It's all about mindset, success in this game, my friends. And, as we say all the time, as we say here at the prop trade, it's all about managing your risk. Keep it tight. Don't overtrade. Don't, try and think the market owes you a penny or two or a cent or two or a dollar or two when you've had a few losing trades. It's part and parcel of success in trading longevity. So just stay at it, my friends. I just seen a new book that's coming out, a new Jack Schwager book. I'm looking behind me, see if I've got a copy of the original. I can't see it immediately. It's in a pile somewhere. There's piles of books everywhere here. A new Market Wizards book's coming out. I'm not quite sure when it's due, but I pre-ordered it yesterday, and I can't remember the date when it's actually due. So have a look for that. Great series of books. In fact, is it down there? No, it's not in that pile there. Oh, it's gone. There's distracting books everywhere. I can't see. I can't put my hand on it. But anyway, Jack Schwager, new trading book. If you're interested, I'll put the link up on our Discord group. But everyone, should have some trading books. If you haven't got any trading books, you're a real trader. That's what I'd say. But anyway, welcome to the prop trade. Today is we've got. Obviously, we do a wrap of the week. The chart next to me is the everyone's favorite, the gold chart. So that high where it says high of the day, that was from yesterday. We were trading this yesterday live, and we did really nicely on the way down and then on the way up on gold yesterday, around about the US Open. So if you want to join those sessions, please do so. So gold bid again. We're over the key 5,000 level here. This is the purple line where our stop loss and target was yesterday. Bid this morning, we've been as high as $5,040, and we're currently trading at $5,030 at the moment. Main data today, I was about to say, and I cut myself off, is my want, I suppose. We got the key PCE price index. It may not be familiar to you, but it's important because it's the Fed's preferred measure of inflation. So instead of CPI, the Consumer Price Index, CPI, that came out earlier in the week. We had the Canadian one on Tuesday, a little bit weaker than expected. We had UK one a little bit hotter than expected last week. So what we got here is this core PCE price index. So it's due in about 5 minutes at the bottom of, or 3 minutes, it says there, at the bottom of the hour. We've also got Canadian retail sales, and we've also got the second reading of GDP for the US. Remember, GDP is backward looking. It's a really old one. It's 30 odd days late. I think 22 days late due to the government shutdown. Similar with the PCE number, also 22 days late. So it normally comes out the final Friday. I burnt my lip. Can you see that? I just had some noodles for lunch, and I wonder if it's the scratchy sauce in there. I'm not sure. Anyway, sorry, I'm a bit distracted because of that. So that's a key measure for most of the members of the Fed deal. This is the most significant measure of inflation in the US economy. So PCE, consumer expenditure, consumer income, normally comes out a day before, and then the actual price index itself comes out the following, typically on a Friday as well, typically the last Friday of the month, but obviously because of the shutdown, they're all over the place. Earlier this morning, we had some really strong UK data. We got retail sales bouncing back quite significantly. We got PMIs, which were much better than expected. 53.9, just shy of 54. That's where the US had been. Last month was upgraded to 54. In fact, it's downgraded. I thought it was, I don't got my memories going, but 54.3 it was. It's been actually downgraded to 54 flat, but 53.9. So better than expected, though, both manufacturing and services number. Also, for Germany, the colossus of the EU economy is starting to move forward, and again, manufacturing now eking into that expansion phase, just over 50, still relatively moribund. We slipped back into contraction in France. The two big in manufacturing, obviously, we've got Italy and Spain as well, two big manufacturing hubs in the EU, but UK data better than expected. So retail sales was better than expected. Manufacturing PMIs, remember, they're important because they're forward looking, were better than expected from the UK today. But we did have that spike up in unemployment early. It was early in the week, wasn't it? Earnings slipping and unemployment hitting a 5-year high in the UK. It's not actually on here, the actual unemployment rate, but it got to a 5-year high, particularly like with all developed economies and developing economies as well. It's the young that are finding it most difficult. If you've got a job, you're keeping a job, you're doing okay. Those, as we said yesterday, I was talking to people yesterday. If you weren't here yesterday, there was an interview with the chief economist at the ADP, the Private Payrolls Bureau in the US, and she was saying people are people are moving around less. We've seen that with the JOLTS numbers. That's what the JOLTS gives us as well. But people are moving on average now for only an increase of 1.9% in their wages. Obviously, people tend to move for increased salaries, increased earnings, increased wages, but it's only 1.9%. It had been as high as 10 and 11% post a COVID bubble. So it's come down really significantly. So people are just shifting. Perhaps for the sake of it, some people are moving just for a better work environment, better combination of remote working and office working, or those that want to go into the office full time, all that sort of setup as well. So let's have a look what this data looks like in a minute. It's dropping now. We'll have a look at the response on the markets. We've seen that gold's higher, oil's higher, all because of the geopolitical situation, particularly obviously the situation between between the US and Iran. Sounds and looks pretty not nailed on, but pretty imminent, unless the Iranians come up with some sort of thing that placates Trump. So GDP, backward looking, it's negative. It's actually coming at 1.4%. That's the second reading, so it's been downgraded quite significantly. There'll be some detail in that which looks which might have just skewed that completely. It might be to do with the weather. We remember had that really bad weather in the US. Core PCE ticking higher. The administration won't want to see that. And let's have a look at this. So this price has also gone up. Right? This is advanced GDP, the price index. So price have ticked back up. So this idea that which is what a lot of the members of the Fed were saying at the in the minutes. Some were even talking about possible hikes. And so the chances of a rate cut in June have slipped back to July, and we'll see how that pans out with this data. So this is a tick up in inflation, 0.4 of 1%. So it's twice what it was last month. Obviously, the caveat is that it's delayed and it's quite out of date. So next month's will be key. I don't know if that's going to come out before the end of March, but next month's will be absolutely key. GDP missing, but look at this. Previous month upgraded quite significantly, 4.4%. That's an upgrade from, I think it was 4 and a bit percent. So if we just look at the GDP graph, it is starting to see some life and some well, there were quite get rid of the focus. The administration we're looking for this to be quite spiky. So 4.4% is a pretty good number that's come through on the GDP number. The PCE though is that will give the dubs on the Fed. Saying we don't need to cut quickly, that will add to their mitre as well. And this figure, as I said at the beginning, there is more significant than the CPI figure when it comes to how the Fed and their colleagues, members on the voting and non-voting members, see the prices, the price index in the United States. Advanced GDP. Price is up 3.6% as well. So we'll see if the PMIs later on this afternoon as well out of the US. Forward looking, I think these are actually not delayed, are they? They're so it's on form next month, end of next month. So this is be interesting to see what this looks like if it follows, which it has been doing, Europe and Asian PMIs over the last few months, and obviously the US leading the way. You see there 53 for services, but UK's caught up and doing really quite significantly, quite a strong three. Given with the trade balance we got from the UK yesterday, 3 big positive bits of data save the unemployment number from the UK this week. So 3 good ones, 1 bad one. Obviously, we had that out of the UK. So let's have a look how the markets have done. I don't me blaring on. So gold was heavier. Let's have a look if it's reacted to that. Probably not the most reactive. So dollars picked up on here. See the gold come down here in the 5 into last. Well, that's isn't relevant anymore, but down quite a tick, isn't it? So we were at 530 and we're down to 521. So we lost the best part of $10 on the gold market there, and that's that's a bit of a short trigger there. Actually, we didn't. There we go. We did touch the outside on the volatility, so you could enter on the conclusion of this candle at what is it, 12:35. So you can't trade 5 minutes either side of the data, but you're happy to take that as a short. So that would be, let's just leave this like we did yesterday. That's if you're trying to trade the data, that would be a short on the close of that candle there. So let's check that to a green. It may obviously react to the data. So I don't really like trading the news, but that's a fairly weak signal. So we only just touched outside the Bollinger Band there. Anyway, let's have a look at elsewhere. Let's look at the Forex market, and the dollar has had a good week this week, and we are up. So euro 117.60, so a big breach of the 118 level for the euro. Check the hourly chart. So we've been going down all week. We've been looping down, leg down, retrace, leg down, retrace, leg down, retrace. So we spiked earlier in the hour to 1782 as the data came out, but again that one is still long. There's that on the hourly chart that would have triggered long there this morning at 9 o'clock when that 8 o'clock candle completed. A touch of the outside of the Bollinger Band and a big positive candle in the same hour. We got across of the stochastics lines, and it's been long all morning with your stop. Well, if you got your stop a bit too clever here, we're doing stop down there, but stop below that wick, and we're still in it. But the volatility of the data on the hourly time. I like this on the, it's more choppy, but there we go. So we went up initially to 117.82, and we've come back down the other way once the data has been absorbed a wee bit. Oops, hang on a minute. Let's make my head a wee bit smaller. There we are, taking too much of the chart up. So that's euro, and as you can see, dollars having a good week, and that continues on the hourly time frame. We've been there's a bit of a support there on the hourly time frame at 117.50. Unsurprisingly, big round number again. 117.50 is our support. Yesterday morning, and again this morning, we've been in to test it, and we found buyers there. So let's see where that finishes for the day. If we just quickly flick up to the week that euros had. It's been, as I said earlier, it's been dollar positive. So we've got consecutive daily candles now into our 3rd consecutive day down. Looked like that test on Tuesday was going to hold this 118.50s area. It wasn't to be the case. Big sell-off on Wednesday through 118, and down we go. 117.30 when Trump started speaking in Davos, Euro set at. So that looks like a bit of a staging post as well before we get to 117 itself. So 117.30 next downside target, and it's in its 4th day now in the under half of the Bollinger Band, and still moving down. So moves. Obviously, that big move there was story about Miss Lagarde leaving, potentially leaving the ECB earlier. So I'll just make. Actually, I didn't mention that in my daily video. So dollar, say having a better week. Dollar yen 155.35 now. So again, consecutive 3-day big hike up for the dollar on Wednesday. Thursday followed through, and today we're following through. We're over 155 again today. So dollar bid. Remember, we went all the way down here to 152. At the end of January, we didn't get as low here in the middle of February, and we bounced off that to the upside. We're in the upper half of the Bollinger Band. We're over the 20-day moving average since Wednesday's close, and we're moving higher. Next resistance probably is our entry. That's a top of that candle and that bottom of that candle from this big leg down back on the 10th of February takes us to 155.85. And again, if that's a little mini leg, let's see how much of that we have recouped so far. Where's the 60? There we are. There's the we're just over the 50 yesterday moving, and there we are. So next target is where we've got to today already, 155.57, which is the 61.8 fib level of this leg lower. So we've got there and seen some resistance initially this morning. We've come down the time frame, so see where that finishes today. There we are. There's our level. So we tested that here just before the data, around about the Tokyo close 8 o'clock this morning. As everyone in Japan was going off on their weekend, Friday night, we went to 155.55, 155.55 next round number, and that's where our resistance sits. So that going into the US cash session, let's see if we can get that high if the dollar reacts to the upside. Again, if we look at the 5-minute reaction to the dollar and the data we've just seen, it's dollar positive, leaping higher off the bottom of the Bollinger Band there. And so you go long there, right on the data. So you can't. So you leave till that one. It's still moving higher. So happy to have got in there at 135. So dollar long here on the yen. Remember, we've be careful because it's already touched the outside of the Bollinger Band, so we could easily react back down. So we're entering at what would normally be a target level. So that's the first target. We touched the outside of the Bollinger Band just before the data, and then bang up because it's so tight. So, but have your stop loss at the bottom of that, bottom of the candle you entered on this one. But we could see a move certainly to at least there, the top of that, top of the 20-day where we flattened out at 155.47, shy of 155.50. So a few pips, 10 pips or so potentially on the go in the short term uptick for dollar. Yen, the sterling 134.70, similar pattern, obviously back to the upside, to the downside. Looked like with the good data this morning, the good PMIs we'd seen from the UK, trade balance stuff, looked like 135 was back in the offing this morning. It hasn't happened. We've turned around from it, and we're back at 134.70, so we're still 30 pips shy, and but still relatively positive here because we're in the upper half of the Bollinger Band, but gone sideways since 10 o'clock this morning. Cable stochastic line still pushing higher. So can we conclude that it's looking, it's got weaker, hasn't it? Big candle here on the data this morning. It's fairly okay bodied candle, the 10 o'clock one, and then it's weakened. We had a negative one for 11, small bodied one rejecting higher at 12, and then the US data has been turned around, so rejecting certainly higher. So running out of steam to the upside. The cable this morning. Aussie back 70.42 at the moment. So get this on. Is the old chart again? Even the strong Aussie against the dollar has been weakening this week as well. Again, if we just look at the daily time frame, obviously Aussie's had a really, really strong run over 71 last week, but we've sort of stepped down end of last week, beginning this week. There's Wednesday's big dollar positive candle. We are still holding in the upper half of the Bollinger Band, but this big sideways action is biased to the downside this week and the end of last week. And so we've tested the 20-day moving average for the first time yesterday. We've been under it this morning, and obviously 70 is our big support area. So we're at 70.43. Are we going to test into 70 before the day is out? Weakening move. It's a weak move to the downside. The body candles are quite weak. So Aussie still holding. 70. But if it breaches, we went up to it very quickly. We could easily come back down to it very quickly. But as you can see there, clearly support at 70 and then 68 here, which is now sitting right at the bottom of the Bollinger Band. The stochastics are moving down quite nicely, quite significantly out of the overbought area. So there may be some more momentum to come with this. We had good mixed jobs numbers really from Australia this week. And then we had the Hawks were disappointed with the Kiwi down in New Zealand. So 59.47 the Kiwi trades at. There's a disappointment from the RBNZ on Wednesday. Strength of the dollar, double whammy, and a big move down on Wednesday. Stabilized a wee bit yesterday above 59.50. But we're actually under it now as we speak at 59.48 and just above the top of the Bollinger Band. So this is again another one that's weak, and you can see the significant move of Wednesday pulling the Kiwi lower. So a breach of this bottom Bollinger Band now, we could move down, but we are actual horizontal there on the Kiwi pair. So again, watch that one. 59.50 is support area, and we're right on it now. So again, see how that finishes. As you can see, the rally up was very positive. Equally, the move down could be just as positive, but even quicker. So watch 58 to the downside next week as we come into the end of the month as well. That's the other thing about next week. Obviously, we've got Trump's State of the Union speech as well. So yeah, core PCE, bit of a disappointment. Let's have a look at how it's been reported. So advanced GDP was a big miss, wasn't it? PCE was 2.9% versus 2.8% on an annualized basis. So we saw the big hike in the monthly rate. So it's still hot. That's what the members of the Fed have been saying. That's what many of us have been saying. You know, history shows us a hot, inflation going incredibly sticky. Dollar CAD. Well, I missed dollar CAD out, didn't I? 136. 137 is our resistance to the upside, and we're at 136.90 now. The other thing, obviously, we just got the 5-minute chart here on the dollar CAD, but again, you can see here on the daily, dollars come back against the loonie really significantly from the 11th of February. We've had 1, 2, 3, 4, 5, 6, 7 out of 8 days positive for dollar CAD from that floor at 135.50. In the middle of the month. It's been a good end of the week and a good Wednesday as we saw dollar up and still moving higher here. Crossed on Tuesday. That was interesting before the big move on Wednesday. But next resistance is just a little sort of a minor resistance which we've tested yesterday and we haven't actually been back to today at there 137 itself. So we're topping out at the moment. So we'll see how that goes. If we come to the 5-minute data, I'll bring the calendar back up because we just had that. We had the Canadian retail sales details and PPI as well. So that all came out here at 1:30. So again, it's dollar positive. The combination of all that data, but it seems to have had a bit of a retrace initially. Still held the 20 period in the upper half of the Bollinger Band, and we're now moving back up. But can we get and hold over 137? That's what the bulls will be looking for on this move today. Tentative cross there on that 5-minute. So let me just bring the calendar disappeared again. There it is. The retail sales data from the Canada was better than expected as well, though a big markdown and revision. Actually, it was better. I thought I'd gone worse. No, it's 1.6% for For December, 1.2 for the headline number, but negative on a monthly basis. The core number, 1.1% better than expected. So they're sort of better, the Canadian retail sales data. So dollar CAD, as the other dollar crosses, dollar remains on the front foot to the upside. We had a couple of trades last night. I have had end of day trades this week, which just haven't. I was out a couple of nights, Wednesday and Tuesday, and I didn't publish them. So we went CAD yen and Aussie yen. I think we were, was it long or short? I can't remember now. So I've got my trading platform here, and what did I suggest on? We were long CAD yen, Aussie yen, and oil. Oil hit target and then reversed this morning. So I know that much. I can't remember what the other two were doing. CAD, JPY. This is from last night. I did mark it on here. Didn't think I had. Oh, there we are. Oh, there we are. So we've hit target. So stop loss will have automatically been pulled up to entry on the target being hit. When did it hit target? This morning, European Open. So that's 30 odd pips, I think, 15 pips at least, because it's half. And actually came back quite aggressively, didn't it? It went further, didn't it? It went to 50, another 20 pips. So giving back a lot of that, but it's now picked up. So see if this is obviously only a 5-minute time frame, which is taken on a minimum 4-hour basis, and obviously an end of day basis. So that's still, we'll leave that there. We'll leave the stop loss at the entry. That's looking quite a positive 4-hour candle. And let's see how the rest of the day goes. The other one was Aussie yen. I'm not sure that. Oh no, I knew that wasn't as a move, but that's in the money as well. Stop loss is a bit drippy. Let's pull the stop loss up on that one. Both asleep now, aren't the markets closed in Australia and Japan? Doesn't mean it's obviously it's a risk sensitive pair. So Aussie up against the yen at the moment. So anyway, pull the stop loss up. So if that does reverse, there's 15 pips, 30, what's that? 30 and 15 is 45 pip loss if that gets hit later on. So anyway, I'll have a look at that as well later on. And the other live end of day trade we had was the oil markets, which hit target, it's in the oil target, and then reversed to stop loss. There we are, big reversal on the European Open. If we look at the hourly trade we got in last night, 10 or 11 o'clock, ticked up overnight, got to target this morning, and then reversed quite aggressively. But again, automatically what the system does is close half the position and then pulls the stop loss up to entry when I'm not monitoring it. Obviously, that's around about the turn, that's closed out. So that's got whatever the risk was on that. We've got 50% winner, and half of it obviously closed out now. Same with Brent. I don't know, I marked it on the Brent chart. No, Brent did exactly the same thing. Hit target. Half the position was closed. Stop loss up to entry, and it's reversed to take that out. I'll update the Discord group accordingly. So there were the 3 from last night, and I put them on here when I do it. If I remember, it was 20. There we are, 10, quarter past 10 last night. Long CAD yen, Aussie yen, and oil pairs. I should have put both of them, but it was both with WTI and Brent there. So Aussie hit target 1 and still going. CAD, anyway, they were all relatively successful. So it's been a relatively limited amount of trades this week on the end of day, but we are in the money, I think, overall. Or are we out the money? Oh no, it was about 10 pips now. I think I might have pulled me into just about flat for the week. I've been concentrating on my short-term trading a bit more this week. So there we go. So that was the Forex than what we were had open from last night. So let's have a look at the rest of the market. Bitcoin continues to languish. We've been saying this mantra for a while now. And see on the daily time frame, there's our daily trend lines, which were under again, under this one, way under this one. So where have we been as low today? Yesterday we went to 65.50, 65,500. So just, there's no relief really here, and we are ticking down. And 65,500 was our low. So it looks like 65 is calling. See what the weekend brings for Bitcoin, but no big moves. And the candle again. Look at the size of the candles, guys. Relatively small volatility for what we can normally see in the Bitcoin market. So 20-day moving average now under the 70,000 level now as the price continues to wind down. So, but obviously this is still argue that this is a congestion zone, which indeed it is. Above 65, below 75,000 range since the 7th of February. Buyers at 65,000 and at 60,000 lifted us up. So are we? It looks to me like we're going to test 65,000 again at least, and then possibly the 60,000. But things can move very, very quickly with Bitcoin as well. So, you pay your money, you take your choice. As far as this strategy, mean reverting strategy is concerned, nowhere near the outside of the Bollinger Band. We did get to the outside here on the daily basis, then moved up, but that's run. And then it dipped, but we were still positive, and then we turned negative again. That was the key thing. That's why we drew this trend line as well. So it's turned negative again there on Wednesday, as the dollar had a really good day on Wednesday. Bitcoin, riskier asset, down again yesterday. Bounced a bit yesterday. Sorry, it's Tuesday, wasn't it? Not Wednesday. Tuesday, we went under the daily trend line, and the K and the D line here, the stochastic lines crossed, and it's down again. They're still pushing. They're still pointing down, and the bottom of the Bollinger Band may be coming to meet it. Trend is to the downside clearly. So crypto still getting weighed. Energies, we just looked at it, didn't we? But we've got the daily time frame, a strong week. This is all to do with obviously the worry about what is going to happen in Iran. Second carrier fleet in position. Trump started waving his saber, saying giving the Iranians 10 to 12, 15 days before anything happened. Obviously been caught out in the Middle East many times, the Americans, but he's emboldened presumably by the clarity and the speed and accuracy of the Venezuela operation. But Iran is a very, very different setup. Obviously they had somebody on the inside in Venezuela. Have they got people on the inside within the Republican Guard, within the Iranian regime? We shall see. We shall see what time tells us. But and how strong is the nuclear facilities of the Iranians have been damaged by the attack in June, and obviously the ballistic missiles. What state are they in as well? One would guess not great, given the economic state and the sanctions that are really, really gripping the ordinary Iranian people. Obviously got a family in Iran as well, extended family, so it's a very sensitive situation and very difficult situation, and difficult to be openly hostile to the government there. But is Trump going for regime change? He's only got less than 3 years now. What sort of lasting legacy does he want to leave, or does he think he's leaving? But anyway. Oil over $65 yesterday. Very significant candles. Wednesday and Thursday over 62 was the key support area. 65 was resistance. We banged up there, but it is all geopolitic. The supply and demand angle is out the window at the moment. And what will the Iranians do with the Strait of Hormuz? Will they restrict supply? And obviously the Russian Ukrainian situation is weighing on geopolitics as well. Both get solved very quickly, potentially, but they could, and as this is what's proved, could drag on for a long time as well. So, oil bid. That's WTI at where we traded. We're trading at 66.35, and Brent's trading at 71.50. So Brent, the global benchmark, typically higher than WTI. $3 or $4, but it's over $5 higher now. So bid to the upside, and we continue to rally over 70, 71.50. Oh, did we get to 72 this morning? We did indeed. We got through $72 on Brent this morning. So oil also bid. Stock markets is continuing to sort of shift sideways. We were up 7 points on Tuesday, 6843 on the S&P. We were up 38 points on Wednesday, 6881, and then we lost 20 points yesterday, 6862. So it's a bit of a languishing week. We trade at 6843. Some 30 minutes before the cash open. So here you can see on the daily time frame, still congestion at highs, still can't break through and hold over 7,000, but we're at the bottom end of the channel now, and it's been a very lackluster week. The retailers this week, the big one, Walmart. Some people say Walmart and Walt Disney marks the end of the earnings season. We are coming to the end. The biggest company, the new biggest company in the world, reports on Wednesday. Nvidia likely to beat expectations, but the bar is very, very high, or has been for Nvidia, and investors are getting twitchy about this massive capital expenditure. The Mega 6 or Mega 7 are popping in. So we clearly, you can see this week, run out of steam. And we are now 7 trading days under the 20-day moving average. Big down day, last big moving day was a negative one on the 12th of February, and we've really been sideways since then. Dollar yields and stock markets had a good Wednesday, but we were down again yesterday, and we're down again at the moment. We're 6885 on the S&P 500. The tech Nasdaq 100 even more sluggishly under its 20-day moving average, and significantly again big down day there on the 12th, and again 6 days sideways action under 25,000. 24,000 is the big support zone for the Nasdaq 100. Really undecided. See what Nvidia bring. Unlikely, well, I was going to say unlikely to shock. We shall see. But is it enough to move this market back up if we run out of steam? February typically is quite a weak month for stock markets. The earnings season is more or less done. I say with Disney and Walmart marking the end of it. And Walmart's outlook was pretty tepid, pretty limited yesterday as well. And I remember Walmart, the big bellwether of the retail sector. So retail not doing great in the US, and Walmart the leader, not giving a very strong forward guidance. But there is a new guy coming in to take over Walmart, so it may be giving him an easier entry, and he can move from a weak base upwards. But anyway, we'll see how that pans out. But the upshot is we've got sideways action really on the stock markets as we sold off last week, and we've gone sort of sideways this week, very much so. There on the Nasdaq, you see that exploded, and the Dow, the industrials, doing a bit better than the S&P and the technical techie Nasdaq, but also yesterday took us into the underside of the the underside of the 20-day moving average for the first time in a couple of weeks as well. So that might be one to watch. So we could have a week end to a pretty lackluster week as well. So the big 50,000 only held for a few days, and we're now back down at 49,300, and quite significant move down yesterday. See what Friday brings. Here you can see they're very much moving lower. The MACD also very much moving lower. The cross on the MACD line, the cross on my stochastic lines there, and the MACD signal and MACD line also all happened here at the beginning of the week on the 13th. Last Friday, and it's been very lackluster since then. So we're down again yesterday and down again today at the moment. In Europe, the DAX trading at 25,100. So also down. Is that the DAX? Yeah, 25,000. Yeah, better week here, but down day yesterday, and again not much movement. FTSE, on the other hand, New all-time highs this week, 10,700. And I think it looks like we've pushed even higher this morning on the positive. I said there was that catalyst, that combination of positive data. Indeed, it was that open. No, it's at 10 o'clock. Interesting. So new all-time highs here to 7,020. Let me change the numbers. So new all-time high 7,020 for the FTSE on the 20th of February. So there we go. That's bid to the upside. And we started where we will finish where we started. Gold, as the worry, geopolitical worry increases. Obviously, the bid on gold is back on, and the breach of 5,000, which looked a bit iffy last week, we haven't looked back since the move. So that's the hourly chart. The breach under 5,000 last week, which looked a bit iffy as we were coming down on Thursday. Friday, we bounced back to hold and close the week above 5,000, but earlier in the week looked like we were giving that back up again. But it's a supreme support area now. We've got a 20-day moving average. We've got the 50% fib level, or even it doesn't have to be a fib level. It's 50% retrace of the big down leg that we had when we freaked out at the end of January. Caught a lot of CFD brokers badly. I know, but we're back at that level, and that's where 5,000 sits. So we got the 20-day moving average, $5,000 sitting there as a round number, and the 50 fib level of the last leg down. So we need to move higher if we're going to get bullish, and the next upside resistance is there at 5,140, where the 61.8 fib sits of this last leg lower. If indeed we continue this move up, but it looks like it may be weakening again today. But anyway, all-time high, remember, 5,600, still supremely well bid. This has gotten a bit choppy. You can see how the K and the D line have come in to touch one another, but we've now got a nice bit of oh god dear we got a nice bit of air between the blue and the orange line, and we've got a nice angle on it. That's the word I was looking for. A nice angle to the upside since Wednesday's bounce off that 4,885. That again, that key speech, or key price level where Trump started speaking, that seems to have started playing in. So I'm happy to use that level. That's marked on my chart. So gold bid to the upside again. Sorry guys, I've not got your comments on here. See anybody's chatting? No, he's got no. Okay, 2-4. It's 2:05 here. So next big data dump is the PMIs from the US. In about 40 minutes time, we got the US Open, cash open at the stock markets in 25 minutes, and the PMI data. As I say, likely, but who knows? We'll see what happens. Likely to follow the European numbers to be better than expected, but we shall see. And then new home sales, much delayed new home sales. That's 24 days late. 20. There will be two similar at the so, and then the November number as well. So 58 days late. That could be a bit of a surprise in there. But even at these numbers, 730,000, it's still a healthy US new home sales market. Even though there's lots of twitching people saying people can't afford new homes in the US. Anything, typically, historically, it used to be anything over around about 550,000 was positive. Obviously, that's gone up to about 600,000 recently, but still construction is where the workers are required, not necessarily for new homes, but all these data centers that all this capital expenditure is investing in. But again, we'll see how that comes out later on today. So interesting dump of data still to come today. Now, also we've got the CFTC numbers as well, and the rig count as well later on today from CFTC. So There we go. Next week is a bit quiet. It's the final week of the month. The key thing will, or potentially, is obviously the situation. Um, uh, is it just take me forward next week? There we are. Next week we still got the Chinese markets come back next week after the Asian holidays. Australian inflation, first big high impact event on Wednesday. Mr. Lagarde's got a speech. Remember, we just chatter about her perhaps leaving earlier. Consumer board, consumer confidence on Tuesday. That's a key number. Has that weakened as much as we saw with the last reading of consumer sentiment from the University of Michigan? We'll watch that later on. PPE. And so that's a late one as well, isn't it? Where's this from? 2 weeks late from the last shutdown PPE. So CPI not on here. Australian CPI weekly claims as normal on Thursday. So as I say, a relatively quieter week next week. I'd watch consumer confidence. I'd have that as a high impact event myself personally. But anyway, that's just my take on things. This is key as well. Trump's State of the Union speech on Wednesday, 2 a.m. GMT. Will he be announcing we've had to attack Iran? Probably not. In the State of the Union, they'll be banging on about how great the economy is and jobs and investment and trillions of dollars coming from overseas and blah, blah, blah. But, that core PCE data today is showing a bit of twitchiness, but it could be positive in the long run. We shall, again, as ever, we shall see and trade what you see, not what you think, my friends. Don't overthink things too much. So have a great weekend, everyone. Stay safe. Love those that are close to you. Give them a hug for me, and just be kind. Okay, be good, guys. See you soon. All the best. Bye bye.